Tesla shares soared 10% after Morgan Stanley upgrade. And basically, they're saying buy, buy, buy. They think it's going to go to 400. And I want to go over the details of this and shed some light on some things that I think are really important. So let's just jump right in. Take a look at some more headlines. Tesla jumps on prediction supercomputer unit could add $600 billion to market value. So we're basically saying, hey, Tesla is more than a car company. It's now a supercomputer company, and they're going to make tons of cash is the idea. I guess they're calling this thing the Dojo supercomputer. And here, Morgan Stanley could say add 500 billion. So, is it 600 billion? Is it 500 billion? What's 100 billion among friends? Let's read some details of this. Analysts led by Adam Jonas called Tesla a top pick. So keep that name in mind, Adam Jonas, and he's working over at Morgan Stanley. He's giving a price target of 400 from the 250, and that is a potential upside of 50%. Here's the quote. The same forces that have driven AWS to reach 70% of Amazon total EBIT can work at Tesla, in our view, opening up new addressable markets that extend well beyond selling vehicles fixed price. That catalyst Dojo, Tesla's customer supercomputing effort, in works for the past 5 years. So we're betting on AI, we're betting on Dojo, these kind of things. Now, I told you, remember the name Adam Jonas. Let's take a look at this. You can actually compare Adam's price target to other people on Wall Street. Now, I totally get it. I get it more than you know. All the Tesla bulls and the pumpers, and be like, yeah, Morgan Stanley's awesome. Adam is awesome, yes. But I want you to just put this in perspective. And Adam at Morgan Stanley says, okay, Tesla's a $400 stock. Tony Sacconaghi says at Bernstein, he says it is a $150 stock. Deutsche Bank is saying 300. Dan Lebo of Barclays is saying 260. Guggenheim saying 125. Global Equities 350. Phillips Securities 265. Credit Suisse 260. And then Bank of America 300. And so I wanted to show you this because I want to understand that prices are all over the map. Now, I said, hey, remember Adam Jonas's name because you can actually look him up here. So overall, as an analyst, he has a success rate of 45%. Whenever he rates Tesla, he has a success rate of 33%. He's rated Tesla 66 times. He's been correct 22 out of 66. His average return is 4.7%. So you can make of that what you like. And probably the question you're asking is, okay, what's a fair value? What's in it for Morgan Stanley? Why is Adam doing this? And how is he only correct 33% of the time? Well, I'm going to answer those questions in a moment here. First, when I ask the robots, I say, hey, robots, what's a fair value for Tesla? Robots tell me 161 is a fair value with a fair PE of 29, which isn't crazy considering what Tesla's trading at now. The reason why is right now Tesla's trading at a PE ratio of 77, which is very high. Basically, you look at this thing and you say, okay, if you believe that Tesla's PE is 77, if it deserves it, then that means you also believe that Tesla's earnings growth will be something like 80%, maybe even 100%. So do you think Tesla's earnings, right, how much money they make, do you think that's going to double next year? I don't see it, but in the bull case, if you see it, then yes, it is a decent value, but that's how I would rate it fairly, right? And also the computers say, or the robots say 161 is a fair value. I totally get it though. Tesla is, trying to make gains back on to where it was. It's currently trading at 273, down 10% in the past year. The all-time high, this is the before the split, is sitting at 407. So 400 is not even going to get you back to the all-time high, and that was back here. You can see it was like late 2021. Now you're probably wondering, okay, what's in it for Morgan Stanley? What's in it for Adams? Well, I'll explain it to you. And this is the part where no one else will tell you the truth, and I'm just going to tell you the truth. So, as you know, Elon Musk bought Twitter. We talk about that a lot on this channel. And Twitter's losing a ton of money, right? They've lost half of their advertising revenue. And this is according to Elon Musk's own tweets. We're not just making random stuff up. Elon Musk is saying, hey, we just don't have people advertising on our platform. Because essentially, advertisers are scared to advertise on Twitter because all sorts of crazy content is on there, okay? Moreover, if you understand how Elon Musk bought Twitter, he borrowed money to buy it. In fact, he borrowed $13 billion. You can read the headline here. Musk banks to book Twitter loan losses, avoid big hit sources. So who do you think, and I remember I asked you, who does Adam Jonas work for? Who do you think has some of these loans? Meaning that Elon Musk owes money to, guess who? Morgan Stanley. So here's the deal, and this is how I read this, and you guys can tell me if it sounds like crazy stuff or not. Morgan Stanley is like, yo, Elon, you owe us $13 billion. Please give us the money. Elon's like, well, I've lost maybe 90% of my money over at Twitter. I just don't have the cash. And this is a real thing, guys. This is a very real thing. Elon Musk is worth a lot of money, 100%. He's worth a lot of money. But a lot of times these kind of people, they don't necessarily have cash on hand. That's why they have to borrow money to buy things. They have a bunch of their money in stock. And so the easiest way for Elon Musk to get money to pay back Morgan Stanley is to sell his stock. And it'll be much easier for him to sell his stock if Morgan Stanley pumps up the price of the stock. So please tell me if that sounds like a crazy thing, that he's losing money at Twitter. He owes money to Morgan Stanley. Morgan Stanley needs that money. Elon Musk doesn't have the money. Morgan Stanley's like, okay, we'll help you try to get the money to pay us back. You owe us like $13 billion. And for those of you who say, oh, Elon Musk doesn't care about money. Come on. We're talking about billions of dollars. Not like small money. To him, small money is like $1 million, but we're talking like billions of dollars, right? And if he's losing, 90% of his money over at Twitter, I think he bought it for 44. He's lost like 40 billion already. I think that might be a little bit high. Maybe he's lost 20 to 30 billion, but you're still in the hole to Morgan Stanley and other banks, not just Morgan Stanley, other banks, 13 billion, which does add up. And they're paying a lot of interest over there at Twitter because interest rates are high. Moreover, next quarter, and I've talked about this before on the channel, and I totally understand. If you don't understand these numbers, all this stuff is a bunch of gobbledygook to you, and you just go to the pupper channels and you say, everything's going up. It's awesome. Everything's going up. Hockey stick. But I want to tell you the real numbers, okay? And I'll try to make it as clear as possible. Okay, so quarter 2 of this year, Tesla's earnings went up by 20% compared to last year, okay? So their earnings went up 20%. So that's where we get that fair PE of maybe 29. It's still a bit rich, but it is true Tesla is growing, but not like oodles and baths, not by 100%. If you look at last year, their earnings per share was 65 cents. Quarter 2, 2023, this year, their earnings per share was 78 cents. Okay, you with me? Earnings per share is 78 cents. Here's the reason why the next couple of quarters could be really scary for Tesla. Last year, quarter 3, their earnings per share was 95 cents. So as of right now, Tesla is their earnings is less than last year, right? They earned 78 cents this last quarter. Quarter 3 of last year, they earned 95 cents. And then quarter 4 of 2022, they earned $1.07. They're well under, meaning their earnings are declining. They are well under what they were last year. Yes, it is true. They are making more money this quarter compared to quarter 2 of last year. But when you get into earnings reports for quarter 3 and quarter 4, it might be tough for Tesla to show growth. And it looks like there's a very, very high chance because right now, as of now, they are underneath their earnings from last year. So I try to make it as very clear as possible. I understand that people won't understand it. I get it more than you know, because what happens is the pupper channels, all they do is they say, oh, look at the revenue growth. That's all they say. But here's the thing, guys. If I, put a bunch of big discounts on my cars, right? If I lower the prices, which what Tesla is doing, yes, you can bump up your revenues, but you're not actually making that much money. Do you understand that? I hope you do, because margins are really important. If your margins are decreasing, you're just not going to make as much. And so that's what I'm looking at. I'm looking at, is Tesla making more money or not? And it looks like probably next quarter, they're going to come in less money than last year. So hope that's clear. I can't spell it out any clearer. You can pause the video, look at the numbers for yourself, and you can go to their website. Just look at the earnings per share and look at each quarter what the numbers are. Moreover, and I've mentioned this several times, they're going to be facing a lot more competition. In particular, this article just came out a few hours ago. It's really interesting. China's set to overtake Japan as the world's biggest car exporter. This is crazy because, to be perfectly frank, Japan has been making pretty good cars for quite a long time. The Koreans are now jumping in. You got the Germans always make cars, this kind of stuff. But in fact, China is actually really doing big in the auto industry. And why does this matter? It matters is because Tesla wants to sell their cars in China. But if suddenly the Chinese government is like, yo, Tesla, we don't want your cars. We want to support our own industry, that could really hurt. Plus, if the Chinese economy takes a dive and there's just no one buying cars, it's also hurt. So you're facing less demand from consumers. You're also facing more competition from other brands from all over the world, but China in particular is really on the growth. You can see the charts here. China is definitely growing in terms of car sales. And, this is actually really interesting. This is the electric internal combustion market. So the internal combustions are still outselling the electrics, but the electrics are coming online. You can see the growth here, and so I understand that. And guys, I get it. It's not like I don't understand growth. It's just that I think part of the problem is with the pumpers is basically you're talking about unrealistic growth, and you're also pricing the stock to go crazy growth, and I'm just not seeing it. And now basically Morgan Stanley is like, hey, this whole supercomputer AI stuff is what's going to get Tesla over the finish line, and they're going to be making noodles of cash and buy. But all I have to do is say, okay, why do they need the money? Why are they pumping it up? Why is this guy who's only 33% correct on his estimates on Tesla? That again, that's talking about Adam Jonas, and it's all the numbers are right here. I mean, it all makes sense to me, right? Elon Musk owes Morgan Stanley money, and they're like, dude, give me the money. And he's like, I don't got any money. I can't sell my stock yet. And they're like, okay, fine, we'll help you out. So that's what it looks like to me. I love to hear your thoughts on this thing. Does this make sense to you? Do you understand the earnings report of why I think quarter 3 and quarter 4 will be tough for Tesla? Again, they only make 78 cents per share. And last year they were making 95 and over $1. So they're not at that right now. And in fact, their earnings are declining according to this. So these are just numbers. So anyway, I do appreciate everyone's time. Thank you so much. And I'll catch you next video.